Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, a bit late with the video and the kind of day where a SPY video came out first. That shows you what kind of volatility we had in the market today overall. Cryptocurrency taking off. I was trading crypto the past 2 hours. Now it's time for the MJ video. So we'll start it off with obviously the market weakness, bearish reaction, Trump, China continuing to dump. Weekly uptrend for SPY is in play now and potentially at risk of being lost, but we're looking at SPY to dictate when the sector is going to bounce. The bounce is not going to occur, in my opinion, without seeing SPY bounce as well. So we have to be watching all of the signs there. We have to be watching the RSI levels. And most importantly, we have to see an hourly trend change to get any kind of follow through on these bounces. I am interested in CGC if we see a straight drop tomorrow morning to fill the gap of 43.28, because at that point, the hourly RSI will be down in the teens. The 4-hour RSI will be down oversold. And we are going to be looking for a weekly higher low to form on CGC compared to 39.66. So all of those factors lining up will have me personally looking to scale in to the weakness if we get it tomorrow and if we get that gap fill. So 43.28 is that target. There's another support at 40.33 and then that 39.66 level. I'll probably use multiple orders. Again, it all depends on what the morning setup is. It all depends on what SPY looks like as for how I will trade it, but just looking for an hourly oversold bounce. And anything on the hourly, we have one resistance level nearby at 44.42, but we can pretty much say that anything under the high of the Friday bull move is going to be an hourly lower high. Pretty much every single candlestick since that point has been a lower high on the hourly chart. So just looking for a flush and an oversold bounce. And even if we only get $1 or $2 bounce, that's a solid 2 to 4% bounce, and that's worthwhile enough for me. So big picture, all about the weekly higher low that needs to hold compared to 39.66. And again, weakness is due to the S&P 500, entire sector with weakness following through as well. So Cron, still in a partial swing position, and that's because my stop is below 1390. And it's the kind of thing where, it kills me to watch short term because I set my game plan. The trade went very well. I exited half of it. If I stop out at 1390, I still will have a profitable trade. But it's the kind of thing where I was watching the double top and I'm sitting there saying, I should be selling right now. That would be the day trader mindset in me. I was looking for a longer term swing entry and hoping that the S&P 500 bounce, we get a bit more follow through. But it's the kind of thing where I have to stick to my game plan, and I just had to close down that chart and stick to the stop loss. So still in a cron position, could get stopped out tomorrow. If I do, I won't really mind too much because my attention and focus will be on CGC. And if we do break that 1390 level, Cron is still pulling back. The daily RSI will be approaching oversold again, and we'll be looking down at the next clear level. Really, 13 psychological is the next support level that we will be looking at. And Cron on the hourly chart, we had an end of the day bear flag, little bounce attempt. 1444 is resistance. Best case scenario for the bulls tomorrow, hold 1405. Break 1444 and try and shift that momentum. ACB bear break double bottom was down at 815. We broke that level very clearly. And next we're looking at this monthly time frame. So don't forget to check monthly charts because there's a lot of names that are forming clear monthly patterns. Even oil, Apple, all these names are forming monthly equilibriums. And even the Apple chart looks like this, but we got the high, low, lower high, and now we're scouting for a monthly higher low compared to 458 on ACB. And I do anticipate that we will keep an equilibrium here, and we'll look for it to break sometime in Q4 2019. And at that point, we should get some really nice follow through when these longer term tightening patterns do eventually break for us. As far as the short term goes, hourly resistance is up at 808. Support is 792, and after 792, we're looking down at 733 as the next clear support level. APHA, daily time frame, still very weak. Still looking at that low of 661, which is a double bottom, but there's lack of support below that level. Don't forget the monthly time frame. We're looking for an equilibrium. We need a monthly higher low compared to 375. Still a lot of space to work with before that level, but that doesn't mean we can't see another leg down. Under 661, we're going to be looking down at 624 as the next clear support level. Anything on the hourly time frame under 691 is just a lower high. OGI, bullish news as far as getting approved for the uplisting. That was the most likely scenario, but nice to see it actually official. So a daily inside bar in a tightening range, holding on better than some of the other names. And we're looking at resistance. The high of the reaction was 957, and then there was definitely profit taking into the end of the day. So support is 902. Resistance is 957, and then we're looking at the next level of 966. So we're still looking on OGI for a weekly higher low to form. We need the bulls to show back up on the daily chart to be confident the weekly higher low has been established. And at this point, 959 and 957 have to break those levels. And if we do, that'll be enough of a shift on the daily chart for us to say the weekly higher low has been established and the uptrend can remain intact at this point. And if we get bullish conditions once we're uplisted, and if we can see the S&P 500 get some kind of meaningful bounce recovery, the bulls are positioned fairly well as far as proximity to their all-time highs. But first things first, we have to break this double top the last 2 days. Hexo, that weakness stood out yesterday, and it followed through today in a big way. Gap down and big time pullback. So that's the kind of thing where if you recognize that weakness on Friday, and you see that it's not following the sector, and you see that we break key 725 support, and you exit at that break of 725, you just saved yourself 9+%. You can be extremely bullish on Hexo long term and use these short-term technical signals to better position yourself. Even if you don't nail the bottom of the pullback, you exit it at the clear 725 bear break and you re-enter at 680 for your long-term position. You just trimmed a significant amount of, or you added back more shares or you entered cheaper. Just the bottom line is, even if you're looking long-term, technical analysis can be useful when there's very clear setups that are there to act on. So for here on Hexo, we're looking for a weekly higher low to form compared to 588, but similar to CGC at this point, the size of the pullback that we've seen now, we will look for a lower high on a bounce if we do hold this uptrend. Look at the last 3 times we've consolidated exponential support. 1, 2, 3 times. Here we are on it this week. Hourly RSI got to oversold this afternoon. Bear flag, bounce attempt into the close. The market did that as well. That's SPY correlation. And 654 is support. After 654, we're looking down 653 and then 608 as the next level. But very similar setup to CGC, and we would expect more likely than not a weekly higher low will form to keep the weekly uptrend at this point. TRST earnings tomorrow, I believe pre-market, 6 a.m. I think I read. Either way, if it's a bear reaction, we're in free fall with a lack of support nearby, and we'll be looking down at 7 psychological. And if it's a bull reaction, we're going to be looking at the key level of 824, that double top. If 824 breaks, we have a gap at 850, but it's all about the earnings reaction and just patiently waiting. You can see sideways trading 3 days in a row here as the bulls and bears have patiently waited for these earnings to come out. VFF, inside bar for the bulls. Certainly a good day considering what the market did overall. The question is, can we break $13 on the U.S. side? And let's actually go to the U.S. side as they have been getting some more consistent volume to be the leader. So low of 1185. Bulls held that support level at 1193. End of the day bull move on increasing bull volume. It's all about resistance of 1244 and then $13. If we cannot break $13 and we lose the hourly uptrend from here, we're going to look for further daily pullback and perhaps have to head back down to fill this gap. But again, it does stand out that the VFF bulls closed near the high of the day on an extremely weak market environment. Just like Hexo stood out closing weak on Friday, VFF stands out closing strong today. T-God still weak, 390 broke, lower lows today. So we're looking at the weekly time frame now on T-God, and we have confirmed a weekly downtrend. We lost the weekly uptrend, and we're now in a downtrend with a lower high and a lower low. We haven't seen a ton of bear follow through at this point, only about 2.5%. But if we get more follow through under 381. Next support, 369. And again, just a clear shift in momentum. And looking at it on the monthly time frame, now we're pulling back and the bulls have to form a monthly high or low compared to the all-time low. I cannot stress enough the importance of looking at monthly time frames first, determining what's the most likely scenario, and then zooming in from there. LABS, still looking good on the daily. So another name that's standing out for the bulls, trying for a little daily bull flag. Hourly time frame, saw some very nice dip buying from the low. Resistance of 655 did break, but not convincingly. 662 and 670 are the nearby resistance levels, and that 670 level is the all-time high. So the bulls want to maintain the hourly uptrend from here. 618 is support, and that's the most important short-term support level. If we can't break 670 and we lose 618, I would expect further daily consolidation to take place, or at least an inside bar. But a strong close and the all-time high test potentially in play for tomorrow, especially if SPY bounces and we see the sector bounce with it. VGW, holding on sideways. Not much to note here. We have a daily inside bar. $4 is key short-term support, and we've got resistance of 428 and 432. Break 432 and our weekly high or low will be set, and it will be pretty healthy. And if we break $4, the confidence in that weekly high or low being set will not be there. And you can see it's an inverse head and shoulders pattern on the 4-hour time frame, but we have to break 428 and 432 in the same go to have confidence in that shift in momentum. Curaleaf. So clearly seeing resistance at 15 psychological, and now the most important level is 1380. And if we break 1380, we lose the daily uptrend, and that will be a bit of a red flag, especially with all those rejections. That'll essentially be the bulls butting their head against the wall 15 times, can't get through it, and then giving up, essentially, and rolling over. So 1380 is the most important support level. Most important resistance level for me is 1530, and then we would be looking back at the all-time high. So a weak close here, hourly resistance. Anything we see on a bounce, anything under 1540 is just an hourly lower high, and we had a clear equilibrium bear break to get us to this point, and that bear break occurred at 1468. So I have to be cautious on Curaleaf. If we do pull back, we'll be looking to test weekly exponential support, which has been tested many times in the past and has held those tests. CWeb, still looking like a bear flag. We did drop down to a lower low, breaking, actually it's a double bottom, 1952. Break 1952 and we look towards 19 psychological as the next clear support level nearby. And as far as resistance goes, essentially a triple top, 2090 and 2097 and 2089. So 3 resistances all at those levels, and that's the clear line in the sand where if the bulls cannot break that level, the bears remain completely comfortable and in full control. TRUL, clear dump, bear news. CEO's been accused of some fraud in the past, and now her husband got arrested for fraud, so that's not looking good. So we're dropping down to lower lows, and we're joining now, throw them in the ranks with MedMen, where we have drama and fundamental mismanagement, poor management, and just not a good sign. A bear break of 1497. It's enough to keep people like myself away from this name. I have no interest. I was watching TRUL due to the stronghold they had in Florida, the fact that they weren't an MSO. I know they're expanding, but the fact that they are not already an MSO definitely shifted away my focus a bit, as I was more interested in plays like IAN and Curaleaf and these names, OHCL, that are MSOs. So I am now much less interested, and I am only one individual, but I guarantee a lot of the market thinks the same way that I do, and they're going to be less interested in this drama name as well. I don't want any drama. I just want my money to work for me. So I will no longer be interested in TRUL for a long-term perspective. Anything on the daily time frame under 1810 is just a lower high. Oversold bounce, we'll see one eventually, but there's a lack of support, so those RSI levels, lack of support plus bearish news means RSI levels can get overextended. Hourly time frame, any bounce that we see, anything under $16 is just a lower high, and really anything under $17.30 would be a lower high, as we haven't seen a bounce in quite some time. IAN. So IAN bulls have bought the dip the past couple days. They're trying to see a shift in momentum, but not really seeing any follow through at this point. So still holding a longer term position, still comfortably in the green thanks to short term trading around that position. But anything under 650 is just a lower high. and we have to see an hourly trend change at a bare minimum. Right now, 603 is a double top, so I need to see a break of 603 to prove it on the hourly to me, and then I need to break a 650 to prove anything on the daily to me. So bears have kept control pretty convincingly, and at this point, the weekly time frame, just like CGC, is a lower high every single day, 9+ days in a row. IAN is a lower high every single week, 7 weeks in a row. So bulls still have a ton of proving to do, but they are holding up a little bit better than other individual names the last couple days. ZYNE, another name, standing out as a bull, very healthy. As long as 1135 holds, bulls are in full control. We got a bull break of 1333 today. Not a ton of follow through, but we ended with a tightening range. Short-term key support is 1271. Bulls want to break 1310 first thing, and then 1349 is our top. And this is the kind of play where if I were in a longer-term swing position, I'd just be walking up a stop level with the daily higher-low pattern, or even the hourly higher-low pattern if you want to be more protective of those profits. But again, very impressive overall with how much strength we have seen over the past month in ZYNE. CL, starting to get interested in this 1416 support and a potential play off of that level. The weekly time frame, and actually it's the 2-day chart I like this view better on. Higher low compared to 1416 is what the bulls are looking for, and even if it's just a bounce to form a right shoulder of a potential head and shoulders pattern, there still could be some decent 5+% gains off of that bounce. Again, depends on what the sector and the market do as a whole. A little bit of illiquidity and choppy trading here, but if I were looking for an entry, ideally it would be in the $14 range and using 1416 as a stop. And OH is the same thing, but with different levels. OH, 2-day time frame, 1077 has to hold. We drop down to 1085, potential bottom fishing play. But again, if we see market weakness continue and SPY with another 1% plus red day, it's entirely possible we just break right through these supports without holding them. So you definitely want to respect those stop levels. So overall, heading into tomorrow, I did trade CGC today for a quick little oversold bounce. Not really much there, but otherwise I'm watching tomorrow. And again, my aggressiveness of scaling into bullish oversold bounce positions matches the aggressiveness of the bears, keeping in mind that overall market sentiment will be the factor as to whether or not any bounces get followed through. And we have to have SPY bouncing at the backs of this sector to have any kind of conviction. So long-term setups, right now I don't have many long-term positions. I have not scaled in significantly to my US holdings, and the reason for not doing so is the weekly time frame for SPY. How many times have you heard me say in these videos, keep in mind, SPY weekly has not consolidated. What's going to happen when the weekly chart consolidates? Well, that's now answered. This is what's going to happen when the weekly chart consolidates. We've been pulling back for multiple weeks on SPY. It's a pretty solid pullback at this point. We are still in a weekly uptrend, but things can get worse, especially with this China and US deal. So now is when we want to be looking to scale in, when it's scary. Remember, the best buying opportunity for the Canadian or US MJ sector was at the low of the December dump. When things were at their most bleak and most grim, that was the best opportunity. So as we're seeing fear in the market right now and a pretty big sell-off, these are the times where we want to be scaling into long-term positions. I like entering bullish positions on bull breaks and in bullish uptrends on short-term timeframes for shorter-term trades. But if I'm looking for long-term holdings, I would much rather enter when there's blood in the streets, knowing that a short-term bounce to cool things off and allow me to be green sooner than I would be if I buy into strength and then we start to see weekly consolidation and then I'm holding bags and have to see a 20% move just to get back to break even. I would much rather buy into this weakness. So again, the names that I am most interested in are IAN, Curaleaf. Curaleaf still hasn't started significant consolidation, so that tells me to slow down and not overrush an entry there. I'm interested in OH or CL. I'll have to do the calculation to see how much of a premium there is there. And I will also be interested in, let's see, I believe that's it coming off the top of my head for now. So shopping list getting trimmed down. I used to be interested in MedMen months and months ago. Not anymore. Used to be interested in TRUL. Not anymore. And if MedMen can change its daily or weekly chart, I might get some interest. But otherwise, the proximity to the all-time low, not ideal. So I believe that's it. We'll continue to check in and monitor the space. Keep an eye on those monthly time frames and zoom in from there. I appreciate you watching. We got some Colorado here at the end. Rocky Mountain National Park when no one was in it, weekday morning after some snow. And see you soon. Hope you're fantastic.